Most of us spend our lives gathering possessions, convinced that what we own defines our wealth. But I've come to see a counterintuitive truth, especially as retirement approaches. One of the wisest things I believe you can do is to start selling off your physical assets. I'm not talking about stocks or retirement accounts, but those tangible items that many consider valuable, yet they might actually be draining your resources. At 94, having observed countless retirements, I've noticed a pattern. Those who retire most successfully are the ones who travel light. They aren't weighed down by excessive possessions, constant maintenance, or things that demand endless attention and money. They've simplified their lives and learned to let go. And that's what I want to discuss. I want to talk about 5 specific assets you should seriously consider selling before retirement. Not because you necessarily have to, but because doing so might be the smartest financial decision you ever make. Let's start with something that might ruffle some feathers: your house. Now, please hear me out before you dismiss this. I understand your home holds immense significance. It's where you raised your family, where countless memories were made. It's home. I truly get that. However, most people overlook a critical point. The large family home that was essential when you had children is likely far more space than you need now. With the kids grown and gone, you're probably just rattling around in empty rooms. And that excess space comes at a significant cost. Think about it: property taxes, ongoing maintenance, utilities, insurance, and inevitable repairs. A large house, say 3,000 or 4,000 square feet, can easily cost you $20,000, $30,000, or even $50,000 annually just to maintain. And what do you get for that expense? Several bedrooms that sit empty most of the time. Retirement often brings a significant reduction in income, so reducing your expenses becomes crucial. And for most people, their house is their single biggest expense. I'm not suggesting you move into a cramped apartment if that would make you miserable, but downsizing can free up a tremendous amount of capital. Imagine you sell a $500,000 house and buy a comfortable condo or a smaller home for $300,000. That instantly frees up $200,000. That's money you can invest, and that can generate income in retirement. At a 4% withdrawal rate, that's $8,000 per year in extra retirement income every year. Plus, your ongoing expenses shrink. A smaller house means lower property taxes, lower utility bills, and less maintenance. You might save $10,000 or $15,000 a year just in housing costs. Between the freed up capital and the reduced expenses, downsizing your house could realistically add $20,000 to $25,000 per year to your retirement resources. That's a huge difference. That could be the deciding factor between a comfortable retirement and one filled with financial stress. I know what you might be thinking, but I need the space for when the grandkids visit. But realistically, they probably visit only a few times a year, perhaps for a few weeks total. Is it really worth spending $30,000 annually to maintain that extra space for such limited visits? Alternatively, you could downsize, save that money, and use a portion of it to rent a larger place when the whole family visits, or even help pay for the grandkids to come visit you. When you run the numbers, keeping the big house often doesn't make financial sense. Now, I'm not saying everyone should sell their home. If you're deeply emotionally attached and can comfortably afford it, that's fine. But if money is tight, if you're concerned about your retirement income, selling that large house should be a top consideration. The second thing to consider selling, and this one is usually easier, is your extra cars. How many cars do you actually need in retirement? 1, maybe 2 if you're a couple. But I often see retirees with 3 or 4 vehicles: a sedan for daily errands, an SUV for longer trips, a sports car for weekend fun, and a truck just in case. Each of those cars is costing you money: insurance, registration, routine maintenance, and depreciation. Even if the cars are fully paid off, they aren't free. They're costing you thousands of dollars every year. And here's the key point. In retirement, you're no longer commuting. You're likely driving less overall. You simply don't need all those vehicles. So my advice is this: keep one reliable car, perhaps two if you and your spouse frequently drive separately. Sell the rest. Take that money. It could be $20,000, $30,000, or even $50,000, depending on what you sell, and invest it. Then take the money you save on insurance and maintenance for those extra vehicles and invest that as well. Every little bit helps bolster your retirement savings. I've driven the same car for years. Nothing fancy, just reliable transportation. People often ask, "Warren, why don't you have a collection of exotic cars? You can certainly afford it." My answer is always the same: because I don't need them. A car simply gets me from point A to point B. That's its primary function. Anything beyond that is just ego and status. I've seen fortunes vanish overnight because people held on to things for the wrong reasons. It might be a vacation home filled with memories or a stock inherited from a loved one. But when retirement arrives, sentimentality can be a dangerous luxury. It's about ensuring your financial security, not clinging to the past. One thing I often advise people to consider selling is their vacation home. I know it's often the lake house, the ski cabin, the beach condo that's been in the family for years. The kids love it, and you've created so many wonderful memories there. But honestly, how often do you actually use it? Most people use their vacation home perhaps 4 to 6 weeks per year, and often even less. The rest of the time it sits empty, but you're still paying for it: property taxes, insurance, utilities, maintenance, and possibly HOA fees. A vacation home can easily cost you $10,000 to $20,000 per year, and sometimes considerably more. Let's do some quick math. If you use the vacation home 6 weeks a year, that's 42 days. If you're paying $10,000 to $20,000 for those 42 days of use, that works out to $240 to $480 per day. You could stay in a really nice hotel for that price, or rent a comparable vacation home whenever you want one. And here's another crucial consideration: that vacation home is likely worth a significant amount of money, money that's essentially locked up, not working for you, and not generating income. If you sold it, let's say it's worth $300,000, you could invest that money at 4%. That's $12,000 per year in investment income, which is more than enough to rent a vacation home for several weeks each year, practically anywhere you desire. Plus, you avoid the hassles of maintenance, the worries about upkeep, and the burden of property taxes. Furthermore, renting provides flexibility. One year you can go to the beach, the next year you can explore the mountains, and the year after that, perhaps venture to Europe. You're not obligated to go to the same place every year simply because you own property there. I fully understand the emotional attachment, I really do. But in retirement, cash flow is paramount, and that vacation home is likely a drain on your cash flow, so strongly consider selling it. Take the proceeds, invest them wisely, and rent when you actually want to vacation. You'll probably end up traveling more, not less. The fourth thing to sell, and this is particularly important, is individual stocks that you're holding primarily for emotional reasons. I love stocks. I've built my fortune in stocks, but I'm talking about something very specific here. Many people inherit stock or accumulate stock in their employer's company over the years, and they hold on to it even if it's not the wisest investment decision, simply because it was dad's stock or because they feel a sense of loyalty to their former employer. But here's the harsh reality. In retirement, you can't afford to be sentimental with your investments. You need diversification, you need safety, you need reliable income. If you have 30% or 40% of your entire portfolio concentrated in a single stock, that's inherently risky, very risky. What if that company encounters unforeseen problems? What if the entire industry undergoes a disruptive shift? What if the stock price plummets? You could lose a substantial portion of your retirement savings. I've witnessed this firsthand. People who worked for Enron, WorldCom, or Lehman Brothers had the majority of their net worth tied up in their company's stock. And when those companies collapsed, they lost virtually everything. So here's what you should do before you retire. Carefully examine your portfolio. If you have more than 5% or 10% of your holdings in any single stock, sell a portion of it. Diversify your investments. Put the proceeds into a broad-based index fund to spread the risk. Yes, you might have to pay capital gains taxes, but that's a worthwhile trade-off for the added safety and diversification. And if the stock you're holding isn't fundamentally a great business, if it's just something you inherited or accumulated out of habit, sell all of it. Don't allow emotion or misplaced loyalty to cloud your judgment. Your retirement security is far more important than sentimentality. And the fifth thing to sell, this one is a bit different, is your business if you own one. If you're a business owner approaching retirement, you essentially have two choices: continue running the business or sell it. Many business owners struggle to let go. They've poured their heart and soul into building the business. It's become their identity, their baby. Consequently, they keep working well into their 70s and sometimes even their 80s. That's perfectly fine if it genuinely makes them happy, but often it doesn't. They're tired. They want to retire, but they feel obligated, or they simply don't know how to go about selling. Here's what I've learned. If you truly want to retire and you own a business, you need to either sell it outright or at the very least have a well-defined succession plan in place where someone else takes over the day-to-day operations and you get paid out over time. Running a business is inherently stressful and time-consuming. It's a 24/7 commitment, and in retirement, you want less stress, not more. Furthermore, your business has tangible value, real value. It's probably one of your most valuable assets. But if you keep running it until you're no longer capable, until health, it's strange to think that the very things we work so hard to acquire can become burdens in retirement. A big house, extra cars, vacation homes, even a thriving business. They all tie up capital, generate expenses, and demand constant attention. It's a paradox, really. I've seen it happen so often. The goal of retirement shouldn't be just accumulating possessions, but rather maximizing freedom. Freedom to do what you want, to travel, to spend time with loved ones, but all that extra stuff, it weighs you down. Every extra house, every car, every complicated investment becomes something to manage, something to worry about. I recall a couple I knew, both in their early 60s. They owned a large house worth around $600,000, 3 cars, a vacation condo, and the husband had a small business. On paper, their net worth exceeded $2 million, yet they were constantly stressed, convinced they couldn't afford to retire. Their wealth was trapped in illiquid assets that were expensive to maintain. I suggested they simplify their lives. They took my advice. They sold the large house, bought a smaller condo for $300,000, immediately freeing up $300,000. They sold 2 of their cars, gaining another $50,000. The vacation condo went for $250,000, and the husband sold his business for $600,000. Suddenly, they had over $1.2 million in liquid investable assets that they didn't have before. Investing those assets at a 4% withdrawal rate generated nearly $50,000 per year in income. Plus, their ongoing expenses dropped by roughly $30,000 per year because they were no longer burdened with maintaining all that stuff. Their overall financial situation improved by almost $80,000 per year, and they retired happily and comfortably simply because they were willing to let go of excess possessions. Now, some might worry about capital gains taxes when selling assets, and it's true, depending on what you sell and the extent of the gain, you might owe some. But paying taxes on gains isn't necessarily a bad thing. It means you made money. It means the asset appreciated. You might pay 15% or 20% in capital gains taxes, but consider what you're getting in return. Liquidity, simplicity, and reduced expenses. Don't let the tax tail wag the investment dog. I've seen people cling to assets they should sell simply to avoid taxes, and they often end up worse off. The asset either costs them money every year, is inherently risky, or declines in value. They would have been far better off simply paying the taxes and moving on. Don't be penny wise and pound foolish. Timing is also crucial. You should aim to sell these assets before you retire, not after. If you wait until after you retire, you might be under prez, needing the money urgently. And when you're under prez, you're less likely to get optimal prices. Plan ahead. Start selling a year or two before retirement. This gives you time to solicit multiple offers and negotiate effectively. Plus, selling things takes time. Houses can take months, businesses a year or more. Start early. Don't wait until the last minute. And what do you do with the money once you sell these assets? This is absolutely critical. If you sell everything and then simply spend the money frivolously, you've accomplished nothing. The ultimate goal is to convert illiquid assets into income-producing assets. I've observed something over the years that I find myself reflecting on often. The happiest retirees aren't the ones swimming in possessions. It's those with the greatest flexibility, the strongest cash flow, and ultimately the most freedom. They can decide on a whim to travel for a month without a second thought about who's watching their vacation home. They aren't stressed about rising property taxes or surprise maintenance costs. They're not weighed down by obligations and too much stuff. They live a lighter existence. They're free. And that's what retirement should be. You spent decades accumulating, and now it's time to simplify. Sell the excess, convert it into income, and truly savor your freedom. Now, I'm not suggesting you sell absolutely everything and embrace a monastic life, nor am I saying you can't have nice things or enjoy your money. But be intentional, be strategic. Ask yourself, does this thing genuinely add to my life, or does it simply complicate it? Does it bring me joy, or is it just something I'm holding on to out of habit or obligation? And if it's the latter, sell it. Use that money for things that actually enhance your retirement. Travel, pursuing hobbies, spending quality time with family, or whatever truly matters to you. I believe I've made my point about those 5 assets to consider selling before you retire. Your house, downsize it. Your extra cars, keep 1 or 2, sell the rest. Your vacation home, convert it to liquid assets. Concentrated stock positions, diversify them. Your business, sell it or transition out of it. These moves could free up hundreds of thousands of dollars, perhaps even more. Money that can be invested, money that can generate income, money that can make your retirement comfortable instead of stressful. And beyond the money, you'll simplify your life. Less to maintain, less to worry about, and more overall freedom. That's the true definition of wealth and retirement. Not how much you have, but how free you are. I've been fortunate in my life. I've accumulated a considerable amount of wealth, but I've never allowed it to weigh me down. I've never let possessions complicate my life. I live simply. I've lived in the same house since 1958. Nothing fancy, nothing complicated. And that simplicity has given me a remarkable degree of freedom. Freedom to focus on what I love and what truly matters to me. That's what I want for you in your retirement as well. So don't be afraid to let go. Don't hold on to things just because you've always had them. Be willing to sell, to simplify, and to lighten your load. Your future retired self will undoubtedly thank you for it. I sincerely hope this gives you something to contemplate and something to plan for, because these decisions can have a profound impact on your retirement, making the difference between a comfortable and a stressed existence, between freedom and being burdened. So start thinking now, formulate a plan, and when the time is right, be willing to let go. It's not about having less. It's about having what truly matters. And in retirement, what matters most is freedom. Good luck out there. And always remember, the best things in retirement aren't things at all. They're experiences, relationships, and time. Sell the stuff. Keep what matters.